is something I discovered, I think 1 to 3 days ago. Nabadde awo oba kiki ekyanzijidde mu mutwe ne kiŋŋamba tutandike ne gold. Oh, yeah. Anyway, nkiwa kanzijeko zino lines zonna. So nabadde awo ne ŋŋamba ekino kiŋŋamba, how about if you mark high points on 4-hour time frames, the only major high points on 4-hour time frame, only mark those. What do I mean? So here we have a plain chart. We are going to go to 4-hour time frame. You see it is here. So we are going to read the market structure from this side going this side. So arrow this is a lower high. This is a higher low, a higher high, higher high, higher low, higher high. This is not a higher high. Yeah, it's not a higher high because it has not taken out this one. So this is a major point. This is the major point. So after identifying those major points, we draw a line, a horizontal line. I'm using a ray, so I'm going to draw this line here, and also identify this lowest point. I take the wicks. So now let us now go. Points inside here are not major points. Now this is a major point because it broke this point here, creating a new higher high. And what caused, which move caused the break of structure? It is this point. So this point becomes a major high. So we also mark it. We also mark it. And also mark this point here, this highest point up here. We continue. We continue. So this point pulled back, creating a new higher low. Boom, it pushed up to create a new higher high above this one here. So this point is key, and also this point is key. So we draw a line around here, and we also draw a line above here. Now, so market shifted direction because this was our highest high. It came and broke our key point here, and it came down. So what caused the break of this key point? It is this point here, because it shifted, boom, and it created a high point. I mean, it created a low point. So we also mark this as a key point, and perhaps this one here, this point that caused the break of structure, this point here. Okay, but now we can leave it, or we can draw it, but let's draw it for the purposes of learning. So I have drawn line there. Okay, now after drawing all these points here, we can drop to 5 minutes time frame. Drop to 5 minutes, and we observe price along these key price levels that we have drawn. Look at how price is playing around this key level. That's one point. Let us also look for another. Look at how price came, played around here, broke, taking people's stop losses, and boom, it went up. You see, when it went up, for me, I've discovered that when it reaches this price level, it has by all means to touch this price level to either reverse or continue to the upside. You get it? So let us see. It almost touched this. Have you seen? If you had made your buy around here and you put here your take profit, it was almost being hit. And after it approaching to hit this take profit, again it had to fight back to hit back again this price level here. Eh? Okiraba? So now we continue and we observe price around this key level. Are you seeing how price is playing around here? Are you seeing how it's playing around here? Hmm? See, uh, price came from down here to boom, touched this one, and also touched this one above here, eh? And it came down and it touched this one. So these are key levels whereby price is going to do what? To always hit because they're on higher time frames. I don't know. I think institutional traders, the big boys, use higher time frames to profit. So they will always find a way of coming back to these levels. Aha. Now look here. Ah, this was I think a key point. Price came. If you bought here and you put your take profit here, this could be I think. Let me see how many pips. How many pips? Uh, this is gold. Look at the pips. Eh? The pips are 12,000. 80. This is 1,200 pips. How much about 1,200 pips? Gold. Oziraba. One top left Oziraba 12.811. That's 1,200 pips. Eh? So that now, if you buy here and you put here you take profit, how much money are you going to make? Now, if price reaches here and you see maybe your engulfing candlestick, or you see, let me see, you also read market structure. So I think market is continuing up to the upside. Let me buy here. After buying, you put your stop loss maybe around of maybe 2 pips, I mean 5 pips below here, and you target this level. How many pips will you be in? Let me see. How many pips will you be in? 2,800 pips. Do you see it? Do you see it? What you think? Go just take a stop loss when price goes in your direction. Lock your what? You trail your stop loss. Ebisigadde gwe bireke. Eh? You see how price, see how the market hit this price level. Eh? So we continue backward. See here, it hit this price level and it came and it hit the one below. More again to 2,800 pips on gold. Look at this one. It came hit here. Then after boo 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 boo, it came and hit here. My good Lord, my good Lord. Eh? Ojiraba, ojiraba wanene. You're seeing it when it hits this price level here, it has to go and hit the next price level. This is the thing I've sinamala wadde na myezi, I mean na week number naye just a few days, I think 3 days. I've been observing this one here. Lava, when you see double top here, you say maybe, okay, let me sell. But where is my take profit? My take profit is down here. Just keep quiet. When price goes in your direction, trail your stop loss to break even and wait. This one can be even a swing trade. Kiraba. So this is on gold and it is what I've seen on each and every pair. I mean on each and any asset. What you have to do is identify these key points on 4 hour. Look at this. Here. It came down, it played. Hit take profit. Hit take profit. How many pips are here? Come and measure. Come and measure. Come and measure. This is it. 100. 1,600 pips. Kumanje baita 1,600 pips. Ngojikubye one doti. So you can just do this back test. You see price came here. If it has come here, my next stop is this price level. Watch it. Beta mugumu. This business is for the tough guys. So when you
mm,
enter the mark, look at here, boom. Where was the next stop? The next key level where you could put your take profit. Watch it over. So all you have to do is
mm,
get to know the current market price. Then now draw maybe 3 levels up, 3 levels down, and also look for the nearest key level. Nearest key level around the price. You also draw it and wait for the behavior of it around that key level. You get it? You see, you see, you see, came and touched here, touched here. What happened up? Came from up, boom. This was the next stop. You see, so that we've had a perfect entry. Just target the next key level. This is 5 minutes. You can even go back to 1 minute. That's an early entry. Look here,
mm,
like 19, 1. How many pips are here? We go up to up here. These are how many pips? 5,900 pips.
mm.
Millions.
Nga ziba nnyingi.
5,900. Golooza obwavu oba tobugobye? So
Obwavu
you
buba
can
bwagenda dda.
so you can enter on these key levels. You can enter on these key levels and exit on the next key levels. For 4 hour.
Mm,
Eh?
mm,
Now let us also see this one here. Chat loading. So just do this on each and any pair you want. You mark these key levels on 4 hour, wait for them in 5 minutes or even 1 minute, and boom. Those are three time frames. Three time frames.
mm,
So I think this is enough for this for this session. Tukiraba?
mm, mm.
It is
Ako
enough.
nkikoleeko nakati.
Yeah, go and practice. Kale, bye. I'm going to upload this and share in the group.
Okay.
Kale, but the checklist, please take it serious.
Checklist digiteekako serious. Banasaawa
Eh,
zino.
okay, kale. Sula bulungi man.
Kale ne tweyanzizza.
Kale.
Naawe.